Hello, everyone, and welcome to your Onchain update for the 28th of April. Well, yesterday we had a whole bunch of funny business where the market sold off down to 27,000 and has recovered back to 29.5. So this is one of these weird things. I mean, look, there was a bunch of stuff on Twitter where there was like a whale alert or an alert about the US government coins, or one of these data providers essentially provided an alert that turned out to not necessarily be so true. And really, the takeaway that I get from this, there's two things, right? High level. The first one is that the market's pretty illiquid right now. This is going to have a lot to do with the fact that, interest rates are higher, market makers have less in the market. There's just generally less liquidity, which means things are going to be volatile and move around quite a bit. This is not just Bitcoin, this is the whole world. The whole world's financial markets are increasingly illiquid as capital flows out. Now, the second one is that the market clearly, once it kind of worked out that it was all a bit of bollocks, has essentially recovered the entirety of the move. And my takeaway from that, that's actually a sign of strength. The fact that we've essentially just reverted what was a false signal, so to speak, kind of tells you, I mean, this rally has given people almost no pullbacks. And my personal takeaway is that is actually quite remarkable, right? We keep seeing this play out. And I think there is signal in that. I believe that there is signal in the fact that the market just simply will not give any gains up. Now, we will go through a correction at some point. There's no question. But essentially, the trend is your friend. And right now, the trend does certainly appear to be to the upside. So anyway, I want to touch on a couple of those trading indicators just to see how they performed, give you a bit of a snapshot of what was going on there that we've looked at the last couple of days. And also then move across and look at the supply domain, right? Are we seeing long-term holders spending, accumulating? What's their kind of overall spread and behavior patterns? That's going to be the topic of interest for today. Okay, so the first indicator, and you'll find a link to this in the written report for today. I'm trying, as I mentioned, I'm trying to make things that are a bit more actionable and useful for more people. Now, obviously, there is no single answer to these things. So there's going to be signals that work and signals that don't. And I'm also trying to keep these things relatively simple, right? I'm not trying to complicate things. I generally want the indicators that I'm building here to be fairly easy to understand, use fairly rudimentary logic, because quite often, as an engineer, back of the envelope calculations, it will get you 90% of the way there, 80%. And the remaining 20% then comes down to personal preference and how people like to refine these things. But anyway, this particular tool is really, it's trying to be a dip buying machine, or at least identifying opportune periods of time where, as we move into, let's just take, for example, this being a bull market, there will be corrections along the way, and sometimes it's good to actually take advantage of those and to look for those kind of dips that are worth actually looking at as an allocation point. So what this model does, it works off SOPR, right? The adjusted SOPR variant. Which is basically the profit multiple on spent coins across the whole market. And it really works off three very simple conditions. The first condition is price above the 200-day moving average, right? Very simply, I just want to eliminate the bear market. I don't particularly care if any of these other signals fire off during a bear because, who cares? So in this instance, I'm just doing a really simple 200-day moving average. I'm going to consider that to be a bear market. The second thing is the red line here is the 7-day exponential moving average, so the weekly average of SOPR. And basically, I want the weekly average to be above 1, right? What this is going to do is it's going to avoid kind of these deep, dark periods in time where you get these kind of more significant corrections. So the way to think about this, was the market in profit over the last 7 days? If it's not, I also just want to filter that information out because I'm really looking for uptrending markets here. I'm not looking for every dip. I'm looking for markets that are uptrending. So this tool really, here, this would look like a dip, but as it started to develop, you'd go, maybe not, right? In this instance, it should have actually fired off, but I'm okay with that. That's not what I'm looking for. I am looking for 2019 style rallies, 2020 style rallies, and our current style rally. And the third condition, so the 7-day I want to be in positive territory, telling me we're more likely in a bull market. It's got a bit of positive momentum. People are locking in profits. But the opportune period of time to actually be stepping in and buying a dip is when people get flushed out who bought the local top. So I actually want the daily average of this of SOPR to be below 1. So I want people to be locking in a loss. And this comes from the very fundamental behavior of SOPR, which is that in a bear market, the blue line, which is 1, the break-even price, is typically resistance in a bear market. In a bull market, it typically functions as support. So what I want to see is that give me a SOPR just undercutting just below that one level. Show me that a bunch of people who bought the local top got flushed out. Now, naturally, this would work really well with short-term holder SOPR as well. This one here, I actually need to look at, the reason why is this because it'd be under the 200-day moving average. But this here, even though it hasn't shown up in the green, this one here is a textbook beautiful bounce, exactly what you want to see. A break above, a retest of one, and then a rally higher, right? The nature of the beast here is you always want to have your the analyst in you assessing these things. So you can see here that, let's zoom in on our last couple of days. What we did get is on all of these particular dips, this is where we get SOPR breakdown below one. You want this thing firing off. It's telling you that there is an opportunity at this particular point in time, and we did in fact get that. We got a bunch of people who bought the local top selling at the absolute bottom, and then we got the rally higher, right? So we're starting to get these signals firing off, telling us that investors appear to be behaving as if it's a bull market, right? So trend is your friend. To me, this is starting to tell me, all right, I've got a couple of conditions here that's really looking like a like more bull market territory, to be perfectly honest. So, it's good to see. This is one of the indicators we were looking at the other day. Now, my big highlight here, there's kind of three phases, and there's also three corrections that I can see through this, what you can see on the screen. The first one is this big angry thing after FTX, which was just red. Right? SOPR below one, nasty stuff, all red, everyone's getting flushed out. We then had, I would argue this is one correction, but let's just consider it as one correction. Both of them have the exact same pattern. A pullback that went red, a pullback that went red. Notice that the amount of loss taking here, significantly less than this. This is massive. This is 2 months of just pure pain, 2.5 months actually. This here is a couple of days. Right? Or half, what is it? Maybe a week. So you've got about a week of people flushing out, and then we've got the break higher. And remember, when this thing flips over, this is SOPR going above one. I've just inverted it, so it's always in trading above zero here. But essentially, when it's red, it's below one. When it's green, it's above one. Profit and loss. But you can see this nice break above here, right? Now, the second correction, we had our profits deteriorate down near this dip. But notice here's a really important factor. We got a little bit of red, but notice that it stayed quite low. So think about this. If you have coins from the top, 60,000, and you spend them, you're going to lock in a large loss. If you have coins from 15,000 and you spend them, you're going to lock in a large profit. The fact that this is quite low, pretty much at break even, is really telling you that nobody who's in any kind of price delta is spending. It's actually a signal that the market's like, yeah, it's a dip, but pretty sure this thing's going to bounce. People who are in a large amount of profit or loss, and more important at this point in time is actually profit in my view if we're in an uptrend. Therefore, we basically saw the market go quiet and not go, oh shit, get me out of this thing. They actually went, hang on a second, this could actually be an opportunity. We're starting to see true bull market behavior entering this space. And as you can see, months of red, weeks of red, couple of hours with a little bit of red. You can see that the pattern's starting to change. Now, what do I expect from the next period of time? I expect to see a rally, and we may not even get any losses, and this thing could start to get a bit fumey. Above this level, we're going to start getting to a little bit of euphoria, in my view. I would actually welcome a more significant correction from here, but I actually don't think we're going to get it. But I do think that as we go higher from here, we're going to start getting a little bit frothy. So just keep that in mind and just be careful as we move forward. Similar kind of story. I'll leave that one here. Here's short-term holder SOPR, just zooming in and showing you the same pattern. Beautiful correction. Dip below. Bunch of people who bought their coins recently. Remember, short-term holders is everyone post FTX. So therefore, the only place you could be selling at a loss over here is if you bought this local top. The only place you could be selling at a loss over here is if you bought this local top, right? So the people who bought here, sold here, and then got ripped. The people who bought here, sold here, and we have, well, thus far, we haven't quite taken out the high, but have been taken out. These are beautiful corrections, exactly what you want to see in on-chain data. It is bull market behavior, and you can see the right-hand side of this screen is distinctly different from the left-hand side. This is a value of 1 is resistance, and we're in a bear. This here is a value of 1 is becoming support, and we are in what looks to be a bull, right? Love to see it. Good stuff. Okay, so that's kind of setting the tone of things in terms of the spending behavior and what's going on, profit and loss. I want to move across and look at supply because what we really care about here is, are we seeing any loss of conviction across the market? And we can measure this from a few things. We're going to look at this from the entity side, like shrimps, whales, blah, 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 who's participating. And then we'll transition over and look at the long-term holder cohort, which is obviously the higher conviction entities, as well as a bunch of people who still hold coins from the top, but many of them will be pretty hardcore folks anyway. So when we look at the shrimp, net position change is still 28,000 BTC, and on a relative scale, this is powerful stuff, right? We are still, it's not quite 2017 high. This is high. No, this is the 2017 high in terms of magnitude. This is the all-time high following FTX. This does not look like distribution to me by the shrimp. Now, of course, the shrimp are, they're a small entity. Crabs still also seeing an uptick, but you can see that their balance is starting to soften out. Nevertheless, it's still a healthy, strong uptrend. Shrimp just keep going. You cannot stop these folks. It's quite remarkable. Now, moving into the slightly larger cohorts, fish to shark, 10 to 1,000 BTC, quite a bit quieter. I think this speaks to the illiquidity that we were mentioning before. She's a pretty quiet market out there. And I think there's a lot of institutions and funds who are just not quite sure how to allocate. We're seeing a lot of momentum, a lot of open interest in options markets. So to me, I think there's a lot of institutions who are like, I don't really want to allocate these funds because I got my bond portfolio blowing up over here on the right and my bank is exploding. I'm just going to get my BTC exposure with some call options and just pay the premium to basically keep that exposure rolling is kind of how my read is on that. Again, there's a lot going on there, but that's my kind of gut feel. Smaller holders, right, 10 to 100 are the primary entities, but, it's an uptrend, but it is not the strongest uptrend that we've seen in the past. So kind of a bit neutral there. On the whale cohorts, pretty much flat. So really, it's kind of those smaller entities that are driving a fairly substantial chunk of this. Exchanges are still seeing outflows on the macro scale, and as are miners. So it kind of rounds out that circle. Basically, shrimp are a primary entity that's currently adding to their on-chain balance. Now, moving across and looking at long-term holders, here we're trying to assess the conviction level. Now, what do I expect to see at this point in the cycle? I actually expect to see long-term holder supply start to soften and go into this kind of plateau. We can see it here in, this is looking at the realized cap HODL Waves, so the USD wealth held in coins older than 3 months. You could argue we could even take out the 3 months and just look at it in terms of 6 month plus. Generally speaking, you get some kind of a rounded top near kind of late stage bears, and this thing gradually starts to deteriorate as some of that spending behavior takes place, right? People start to take a bit of profit, and that's how it plays out. You can see the little miniature dip we had here in 2019, which then reverted. People stopped spending, and we got that kind of second wave of hodling before we finally got the distribution channel. We've got kind of the top, the rounding top, but at the moment, it's very, very early in this trend, right? Again, 2019 kind of reached this point. So we're starting to get into that 2019-esque era. But to be honest, it kind of feels like we need another euphoric blow off top if we're going to have something like that. And I would expect a more significant correction to follow from that point on. Right, and now just flipping this, literally taking the inverse. Let's only look at coins that's 3 months or 6 months and younger. And again, very, very similar story. It's just sometimes nice to flip these things and invert. Obviously, at bull market tops, you've got the maximum saturation by new money. And at the bottom, you've got the minimum saturation of new money. You can see that we are in an uptrend. But again, it is very, very early. And at an absolute value, really, the hodlers have been spending very, very little. So I believe that we are early in this trend. Hodlers are not being like, I weathered that whole 2022 bear, 28,000. That's the price I'm going to take. Like, they are still hanging on to their coins and they aren't doing a thing. So to me, conviction still remains. This is all very, very on brand. Nothing stands out as overly concerning at this point at all. Long-term holder supply. So just kind of rounding all that out into a supply. I mean, you can see here that we are getting an acceleration to the upside. Now, remember, 5 months ago, long-term, short-term threshold is at the bottom of FTX. This metric's about to moon because all the coins that were purchased down here at the $15,000, $16,000 realm are about to start migrating into long-term holder supply. This thing is heading to, I mean, it's already at all-time high, but this thing is going up. So we are going to see a huge volume of coins start migrating across that threshold very soon. And in fact, we will start to see this thing soften out when either they start spending or we get to the end of that period and we move into this more bullish phase where coins are a bit more liquid and moving around. And but again, this thing is just going to go up. So again, this is kind of a representation of the past. It's things that happened already. These are just coins migrating into this bucket. So really, downtrends are what give us more signal in this instance, and they typically happen as we break the previous all-time high as bull market distribution kicks in. And just some last charts I want to touch on, sticking with the theme of long-term holders. And we mentioned at the start of this session talking about like if you have coins from 15,000 or from 60,000, your realized value, your profit or your loss will be significant, right? Based on your buying and selling. This metric here is comparing long-term holders. Let's look at all the realized profit that they lock in on every day and their realized loss, add them together, total realized value. Now let's divide it by the long-term holder realized cap. So the way to think about this, how much profit or loss are they locking in compared to their overall wealth, right? It's kind of a relative scale. High values, you can see they lock in huge profits near the top. And typically bear market bottoms and early bull markets are very, very low degrees of value realization. Very, very quiet market. Not much is kind of changing. Very much in a hodler mentality. And, you know, it's clear as day that we are still in hodler mentality. We have not seen any kind of major profit taking yet from the long-term holder cohort. Now, exact same concept, except instead of dividing it by their realized cap, their total wealth held, here we're just dividing it by their transfer volume. So it's kind of like a transactional version of that previous metric. This here, what we're looking for is kind of the volume that they're spending is a lot like, because there's a spent component. Of the coins that are being spent, are lots of them heavy on their profit and loss. So if you think about this, right, let's imagine that the whole long-term holder cohort spends, I don't know, 10,000 PTC. One of those 10,000 PTC is a Satoshi era coin. It's locking in mega profits, but the rest of them are locking in like 5 cents, right? They were bought yesterday, right? Or sorry, that's wrong for long-term holders, but I think you get what I mean. They were bought at the same price 5 months ago, right? So if you look at that kind of setup, what we want to see there is like, well, most of the volume, the average volume was, it's kind of insignificant. If, on the other hand, you're getting huge, like of the coins that are being spent, almost all of them are carrying a huge payload of profit or loss, this metric's going to go higher. So you can see that long-term holders, whereas, let me just quickly jump back, this metric, when you compare their realized value, total realized value to their wealth, they lock in the most at bull market tops. Because remember, their supply is going down and they're locking in profits. So kind of you've got a perfect example of this thing going logarithmic, exponential, where you've got heaps of realized value and the amount of wealth they hold is going down. Perfect ratio is just going to absolutely moon. This one here is going to be the opposite. It's going to show up near bear market bottoms because what you're looking at is that capitulation behavior by long-term holders. Of all the coins that are being spent, it's people who bought the top being like, I'm just done. I hate this thing. Get me the hell out of this bloody asset. So you get these major waves. You do see these kind of semi-high peaks near bulls, but the mega capitulation events happen at bear market bottoms. Now the in-between phase, early bull markets, right? And early bear markets. Early bull markets and early bear markets, we see a very kind of muted response because the long-term holders who are going to take profits have kind of already done it as you enter the early bear. And the long-term holders who are going to capitulate have kind of done it as you enter the early bull. So we are basically trending lower here. And again, I think all of these metrics really do tell us we are sitting somewhere in this regime, which is like, it kind of looks a lot like 2019. In terms of a mental model, that's certainly a very, very sensible gauge to at least have as a guide for now. Many metrics are telling us the same thing. This trend appears to be quite early. And as I've said a couple of times before, we're kind of getting into the frothy realm above here, where I do suspect we'll get some kind of a a peak and then a correction. I don't think we're going to all-time highs to meet Balaji's bet. But anyway, hopefully that all gives you a bit of a gauge on where we're at. But certainly, at an investor behavior perspective, looking at SOPR, man, it looks like bull market behavior. We are seeing investor psychology transition from selling the rip to buying the dip. And it's kind of what you want to see. So anyway, we'll keep tracking this over the course of this weekend. Let me know if you have any questions, and I'll see you in the next one. Cheers.